Aloha, I am John Roth, an estate planning attorney, and this is Just Ask John, where I answer your estate planning questions. Today's question is, do I pay tax at my death? The tax that's paid when someone dies is called an estate tax, sometimes referred to as a death tax or an inheritance tax. The death tax or estate tax is only paid when someone dies with enough money. So it's called the estate tax exclusion amount, and it's changed dramatically over time. In the 90s, the estate tax exclusion amount was mostly $600,000. So in the 90s, a lot of people who were dying, the estate had to pay estate tax. The laws have changed over the years, and now the estate tax exclusion amount is in the state of Hawaii, $5.49 million. And it's indexed to increase with inflation. So that means you don't have to worry about estate tax unless you have $5.49 million, or if you're married, that is per spouse, so about $12 million before the estate would be subject to any sort of estate tax. Also, a common question having to do with estate tax is a gift tax. What if I give somebody something during my life? Is there a gift tax to be paid? The overall term is called wealth transfer tax. So whether wealth is transferred during my life as a lifetime gift, or wealth is transferred after my lifetime in the form of an inheritance when I die. The government keeps track of these wealth transfers. And when a lifetime gift is made, there are some exclusions to the gift tax rule. For example, now there's $15,000 that you can give to any person every year, as many people as you want, and not tell anyone about the gift. It's not a taxable gift. And there are other exceptions to the rule. But generally, if you give more than $15,000 per person per year to an individual, the gift tax rule says that you should file a gift tax return, and the IRS will keep track of the amount of gifts you make during your life. And when you die, the estate tax exclusion amount, right now in Hawaii is $5.9 million, will be decreased by the amount of lifetime taxable gifts you've made. So that's kind of an overall answer to, is there tax to be paid when I die? For the most part, for 99% of people, the answer is no. But if you do have a potential taxable estate because you're getting up there in the millions, it's important that you meet with an estate planning attorney to incorporate tax planning into your plan. Which also brings up a good point that some people that have done estate planning and set up trusts in the 90s or early 2000s may have tax planning in their trust that is not necessary because the estate tax exclusion has increased so much over the years. And in that case, it's a lot of times can be a lot more complex unnecessarily. And so for the people who you know have set up trusts in the 90s that have tax planning language, they may want to review and update their estate plan to take out that tax planning language. So if you have any questions, please comment below or go to our website, hawaiitrustlaw.com. Until next time, aloha.